Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for May 10th, 2010. This is Patrick Ceresna. As always, we start off with the S&P 500 using that SPDR exchange traded fund symbol SPY, and we were talking about that 118 to 119 level, suggesting that any breakdown of that topping formation, we were seeing a head and shoulder style top up there, would begin a profit-taking cycle. That appears to be an understatement, as we got a complete outright market crash that capitulated on Thursday, and subsequently saw even a little bit of still selling pressure coming in on Friday's close. It really doesn't give us enough information this close after the crash for us to actually make a definitive market call where it's going. The most important thing for us to see is coming into this week is that the market stabilizes at these levels. If it does, we will probably see a counter rally come, but that doesn't necessarily make us bullish. I mean, it's just simply when a market gets so oversold, it's natural for it to snap back. So it would be, if we see some good basing early this week, we probably will see the market retracing back toward the 114, 115 area. But again, that wouldn't have us being interested in being long this market in the big picture. Next, I want to take a look at the ISE US Regional Banks Index, which is symbol JLO, and it now appears at 28.5 level up on the upside was the overhead resistance, and now we've seen a retracement during that entire sell cycle come back down towards the 25.50. It's very interesting to see how well the regional banks held in spite of such dramatic selling that was going across on the broader markets. At this juncture, we're going to be watching to see whether or not they can hold these levels. If the whole market stabilizes and retraces, then actually that the fact that the selling was so benign in the regional banks could have bullish implications with some follow through, maybe even back up to previous highs. Next here, I want to take a look at the ISE Syndex, which is the symbol SIN. This is an index of all the casino, tobacco, and distiller companies. And more or less off that 123 level on the upside, we saw some very dramatic selling coming in, no different than what we saw in the broader markets. It's now found some support around this 108 to 110 area, where all the previous highs came in during December and January of earlier in the year. And more or less at this point, we'll be watching for some sort of short-term support to come in here, but if we have failed rally attempts over the next week or two, then there still could be follow-through selling to test even further lower. Next year, I want to take a look at the ISE Home Builders Index, which is symbol RUF. It now appears we've got a double top that properly formed up around the 1250 to 1275 area, and the selling obviously came in very dramatically, testing all the way down towards some support lines around the 1020 to 1050 area on the downside. We expect some sort of a market bounce here as well, probably even a move back towards the 1110 to 1140 area again, but if we have failed rally attempts like that find overhead resistance, they could turn into further selling later over the next couple of weeks. Next year, I want to take a look at the ISE Natural Gas Index, which is symbol FUM. More or less, we saw some good support lines come in at the 94, 96 level, where all the bottoms came in November and December on natural gas. But the selling was extremely intense in this area. At this point, again, we're expecting some sort of short-term supports to come in around the zone. We kind of boxed off that retracement area where it would be very natural to see us to trade up to. We may see maybe even $5 to $7 on the upside on natural gas if we see some short-term bottoms come in early this week. But again, watch for failed rallies. Finally, I want to take a look at the ISE Mini FTSE 100 Index, which is a symbol UKX. The selling in the London market was extremely intense. We've seen overall that it not only blow through the 550 support lines on the bottom, but come back and retest all of the previous lows at around the 505 to 510 area. So selling has been far more intense here, but we are at some levels where there should be some short-term support lines. But just like we've suggested with all of our other plays, we're probably going to get some sort of a counter rally this week on the upside. But if any rally attempts that have failed follow-throughs could very easily roll back down. So trade the upside quite nimbly. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.